Hi, D365 family. My name is Jolie. I'm a senior finance consultant, and welcome to my channel. Recently, I had a request from someone on my channel for a video on debits and credits in D365. What a great request. Thank you so much for the person who did request it. So, this is going to be a fun video because I just have my coffee, which, by the way, says being happy together always. Can't always be happy, but you can make a choice. And today I choose to be happy. I'm going to drink my coffee. Now, I drink my coffee out of a straw. I know you didn't join this video for that. But the reason why you see me drink out of a straw is because I always heard that if you drink out of a straw, your teeth won't get brown from the coffee. But funny enough, because I drink out of a straw, I'll probably have way more wrinkles around my face a lot faster. You can't win in this world. Okay, how to get a sip of my coffee. So, let me tell you about my experience with debits and credits. So, I absolutely love accounting. It's who I am. It's what's ingrained in me. What I first learned about debits and credits had to pertain to my own life in order for me to really understand it, internalize it. So, this video is really around anyone who's really new to accounting and new to D365. But I mean, it can help anybody. So when you think about debits and credits, think about your own income and expenses, right? Everybody knows income and expenses. And so you always want to make sure you have more income than expenses. And that's the same for any organization. Now, the way that they report on those income and expenses is on something called an income statement, or you might hear it called a profit and loss statement. Now, for every debit, there's a credit. For every credit, there's a debit, which means if you have a profit and loss statement, there's one side of the transaction, but the balance sheet is typically the other side of the transaction. So that's why you have a balance sheet and an income statement together, kind of like a dance. It's just the two of them together. Okay, so let's talk about debits and credits and how does that pertain to my own life. The way that I think about revenue is I think I really just grasp the fact that revenue is always a credit when it's coming in. So that makes sense to me. It's credit, or if you'd prefer to have some sort of acronym or some way to remember, think about the alphabet with expenses. So debit expenses means typically that's how you're spending, you're debiting. So A B C D E, debit for D, E for expenses. So they're really close together. Okay, so just think of them together. All right, so now we know revenues are credit, expenses are debits. What are the other sides? Well, for revenue, if your revenue is always a credit or when it's coming in, like if you're crediting a customer, a sale, obviously it's going to be a debit to revenue. But we're only talking about receiving revenue and spending expenses right now. Okay, so if you're receiving revenue and it's a credit, then what's the other side? It's going to be a debit. And because you are going to be debiting more than likely either your bank or your accounts receivable, this is considered to be an asset because you're going to be collecting cash through the bank or you're going to be collecting cash through receivables. Both of them are on the balance sheet and both of them are considered assets. Okay, so let's talk about expenses. Expenses, on the other hand, are a debit. So what's the other side of a debit? Credit. Credits are typically going to be your liability side, or you would credit your cash account, meaning you would deduct from your cash account. So if you're thinking about bank, think about bank always being a debit when it's coming in. It's a little confusing, I know. Let me show you in D365. Okay, so let's first start with expenses. So under our modules, let's go into accounts payable and let's just go under our invoice journal Now you might use pending vendor invoice. It's going to work the same way. Okay, we're going to come to new, and we're going to go to lines. Now this is just a demonstration, depending on your company's organization, is how you might record your debits and credits within the system. But I really want to show you how this works. So on a vendor, obviously you're going to immediately see a default to a vendor because you're in an AP invoice journal. So Microsoft does a really good job in really helping you kind of not even have to think about what you're doing. So here we'll pick an invoice date. And typically I tabbed, Microsoft really likes the tab. So I did not use the tab in my day-to-day life until I got into D365. Now I use it everywhere, and it's really quite nice. But here I'm going to enter an invoice number. I can type in the description. But typically what happens, let me delete this line and show you. Microsoft automatically pulls this credit. So let me delete this. I'm going to go to new. I'm going to generate my vendor account. Now I'm going to just tab over. Now watch what happens. I didn't tab to debit. It automatically went to credit. Why is that? Because on the vendor side, the AP side will always be a credit. Now, unless you're issuing a refund to the vendor. But in this case, we're going to owe the vendor, which is a liability for $500. Now, if this is a credit, what does the other side make it? It makes it a debit, right? Because let's go back to our own expenses. A, B, C, D, E for expenses, debit, right? And so now we can see how easily the system has recorded a debit to an expense account. Typically, you can see this is an office supplies expense account. Microsoft does a great job in kind of moving you towards what's a common type of transaction. Okay, that's AP side. Let's look at AR side. Just go back to the home page. Let's go to, what's the best way to do this? Oh, free text invoice. So accounts receivable, invoices, all free text invoices. Sorry, I was taking a drink of my coffee again. Okay, so we have a posted free text invoice here. Let's go and look at the voucher of this posted free text invoice. So if we go to accounting, what would you expect to see? Let's actually look at the invoice first and see that it's $250. Now, this tells me that it's a revenue account because typically revenue accounts start with 4 for most companies. Not all companies, but most. And if we come up here to the accounting, and let's view distributions. Actually, we probably should view, let's go back. We want to view that voucher. So let's go to invoice. Let's go to invoice journal. And here we can view the voucher. Now let's look at that voucher. Now, remember we talked about if an expense is a debit, a revenue or sales would be a credit. If you're receiving revenue, it's going to always be a credit. So this is a great example where you have a revenue account, which is your sales for $250, a debit to AR. So this is the asset side. And then you have some sales tax that they have accrued in a liability account. And you'll see this very often where your assets start with a 1 and your liabilities will start with a 2. Your expenses will be a 5 or a 6, and your sales will start with a 4. It's very common in most companies. All right, so let's look at a couple other areas now. Where do these postings generate within D365? Super great question. Let me show you let's go. I was going to search for it, but let's just go into our modules under accounts payable, and let's go to setup and look at vendor posting profiles. So posting profiles are really common within D365. Okay, so we have a posting profile that tells the system When the vendor group is either ABC, if it's ABC, we want it to use this liability account. Let me show you. So let's find, actually, let's duplicate this tab. Let's go in and find, let's go to accounts payable, all vendors. And let's insert a column for vendor group. Oh, there's already one there, so we don't have to do it. It's right here. And ABC. Let's see if there's an ABC group. Nope. So there's no transactions or no customers. So let's do 40. And really, yeah, 40 should, all their transactions should post to this 20010. So if we say, give me everything for group 40, and we come here into their transactions, because we have set that posting profile up, if I go into any one of these invoices and I view the voucher, I can see, oh, this has to do with your receipt items, and this is just a reversal of that. But here's your accounts payable, and here is your posting profile. So that's what really drives the credit side of an AP. Now, the debit side, if you're actually posting to a specific debit account, then you can see, you can type it in yourself as you saw a moment ago. So let me go back. Let's go back into Invoice Journal. Let's go back to the one that we created, which is this one. Yeah. So here we have our credit side, which is going to be, this vendor 101 is going to be a part of vendor 40. So it's going to credit this liability. And then here under the debit side, we can actually choose project if we'd like. We can choose fixed assets if we'd like. Those are really common, right? Because you might want to post costs to a project, and this is how you would do that. And it would debit the actual project costs. Now, where are the postings coming from for project? Great question. Let me show you. There is, under the project management and accounting, there is something called the ledger. See where it's at. Posting. Ledger posting setup. And this is where companies will define where they want their cost posted when it goes to a project. You can also see this on the actual project itself. So if I was in, let me go back into all projects. It's really easy to go to a project. So say I wanted to go to this project, and I believe it's under control, maybe under manage. Forgive me, it's been a while, but you'll see. Let's go to plan. Project, ledger posting. It's the last one I went to, of course. Ledger posting. So here under ledger posting is a quick way to see how this project cost. So if I was to pick this project ID, come up to Invoice Journal, post this project. Okay. And then under project tab, let's go back. Ledger posting for car rental. Let's do car rental. Let's go back to our lines. We're going to have to put an invoice number in and an invoice date. Okay, so when we post this, what do we expect to happen? Well, we expect the vendor posting profile to be 200110, and we expect the car rental to be 601501. We told it to do that for this project. While this is processing, I'm taking a quick drink of coffee in the background. And I hope everyone has a wonderful day. Oh, let's see what we got here. Oh, we need to set an employee to approve. Yep, that is makes complete sense. So we do that somewhere within this area. Let's see, invoice. Oh, here we go. I'll just see if I can prove it myself. Should it allow me to do that? Let's try this again. Yes, so hope everyone has a wonderful day. I absolutely love bringing these videos to you. I have so much to learn, but just love sharing what I have learned so far. Okay, so let's go to voucher. Okay, so there it is. There is the posting that we set up where the credit is AP. Remember, credit is a liability. Always, always. And it hits the balance sheet. And the debit side is your expenses. Remember DE and 601501. If we go into our ledger posting, we'll see that 601501 and our posting profiles are 20010. That is the postings within D365. Now, postings is everywhere within the system. Let's talk for just a second about fixed assets because I really enjoy how fixed assets is set up as well. Here's the fixed assets posting profiles. So you are telling your fixed assets where to post when they are booked for acquisitions. So when the book is 150 SSLR for an acquisition, we want it to post a debit to 180100 and a credit here. Now, this credit can be changed, right? Because you might be a company who post your fixed asset acquisitions within AP. You might be a company who uses the fixed asset module to acquire your assets. It just depends. You might wire your fixed asset payments to the vendor or the person you're buying the fixed asset from. And this offset account might be the bank. So you just have some ability here on this offset account to do, but this main account is really important because this is the debit side. So this is putting an asset in your balance sheet for your fixed asset. Now here we would change depreciation. So on depreciation, you're going to have notice that this is a accumulated depreciation. Let me get this. I got a stuck screen here. Oh, there it goes. So let's not talk about disposals on this example, but here you can see depreciation. The first account says accumulated depreciation. Well, guys, accumulated depreciation is always a credit and depreciation is always a debit. Why? Because depreciation each month is an expense, right? So expense equals debit. So even though here, this first account is going to be a debit, Microsoft says now they're switching it up. So this first account is a credit. Okay, let me show you what I mean by that. So here under fixed assets, fixed asset journals. If I say new and I go to fixed asset, I'm going to lines and I say acquisition and I want to acquire an asset, which I think I need to create a new one, but let's just say we want to acquire this asset. Now watch what happens here when I hit the tab button. It automatically goes to debit because the system knows typically when you acquire, actually 100% of the time, when you acquire an asset, it is going to be a debit. It's going to be a debit to your balance sheet. Similar to when you receive cash, it's a debit, or you have an AR that's due to you, accounts receivable that's due to you, it's going to be a debit. So Microsoft does a great job there. Now, if we were to do a new depreciation entry, pick our asset, our book. Now watch when I tab, it automatically goes to credit. So Microsoft says when you're booking depreciation, the credit side, your accumulated depreciation, it will always be a credit side, which means the debit is your expense. So you can see here, The debit is this 607200, which we set up to post anytime there's a 200 SSLR. So let's go back into, I'll go to this tab. Let's go back into fixed assets under posting profiles. Again, I love how we have the ability to really drive those postings. Depreciations, here's that 200 SLLR straight lined. And then notice the offset account, 60720, 60720. So what does that mean? This credit, right, is going to be this 180200 when it posts. Pretty neat, huh? All right, there's so much more when you're talking about purchase orders. You really drive that under something called postings. So I just typed this here instead of trying to look for it. But postings really has how you want, oh, excuse me, that was not the right one. Let's try that again, posting. Maybe without an S, that's what it is, without an S. So you set the postings exactly like I've walked through with you for sales order, purchase order, inventory, production, standard cost. Microsoft has some really thorough detail on what all of these mean. However, I'm always happy to walk you through as well. I hope that helps anyone new to debits and credits. Again, remember that when revenue is coming in, it's always going to be a credit. When expenses are being posted or acquired, it's always going to be a debit. And when I say acquired, when you are expensing items, it's typically going to be a debit. Now, there's always caveats to that, especially if you do any sort of reversals or sales credits or vendor credits. You're just going to use the opposite of that. Guys, I am open for any videos that you want to hear about. Just let me know. It's my pleasure to share with you. Have a great day.